Hi, ladies. It's Mariah Murray here, and I'm here with our Sisters Alliance co-founder, Linda Karressy, who is also the CEO of Insight Financial Group for the October segment of Sitting with Sisters. So welcome, Linda. We're so excited to have you, obviously.
Thanks, Mariah.
I'm going to give her a second to kind of talk about what she does at Insight Financial Group so you guys have a better understanding before we get into the topic. So, yeah, the floor is yours.
Okay, sounds good. So as Mariah said, my name is Linda Karressy, co-founder of Sister Alliance. I own Insight Financial Group. I offer accounting services to small businesses and nonprofits. And so not only those type of services, but love teaching those about accounting.
Okay. So for this Sitting with Sisters segment, we really wanted to focus on personal finance and just going into the 2020 year with your finances intact, especially with COVID. So what would be some of your best tips for people to go into the 2020 year prepared, and how should they keep up with their accounting to be prepared for things like COVID and whatever happened in 2021 at this rate?
Yeah. I think, there's a long list, but I think there's three things. So number one, ensure that your accounting records are updated on a monthly basis. So that means making sure you're performing your bank reconciliation, your credit card, and then also any other reconciliations that you have to perform, particularly if you're receiving grants or if you are receiving any funding regarding loans. So you want to make sure that's recorded. Number two, just make sure you keep up with entering the transactions in your accounting system. A lot of times we fall behind. I know everyone gets busy managing your business, doing the work, but just go in, look at the data, code the transactions, keep that up to date. And then number three, just make sure you take time just to review your cash balance to make sure you have enough cash just to cover expenses. That's really key. So that's why a lot of businesses were, everyone was caught off guard with COVID-19, but a lot of those organizations that had to really ask for the PPP loan is because they were cash strapped. So if you start looking at your cash balances, just making sure that you're able to cover your expenses, but then also just start saving. I've been telling people now save about 10% and just put it in a savings account for your business.
Okay. So for people who don't know, basically, for me, I kind of know what you're talking about because right now I'm in the finance class. So for people who don't know what you're talking about and would rather just hire someone to do that for them, what would you say is the difference between all the finance positions, like an accountant, a bookkeeper, a CFO? What are the major differences, or how do people go about knowing who to hire, I guess?
Yeah. Good question. So a bookkeeper is someone who they may or may not have a degree in accounting. They may have an associate degree, or they may have just taught themselves online. So these bookkeepers, they enter in the daily transactions. They probably can handle your invoices, enter in your bills. They may be able to do reconciliation, but as you can see, they're doing a lot of the daily transactions. A accountant not only can do the bookkeeping, but they can also look at your financial statements. Most importantly, they can create them. They can also go into your accounting system and correct errors. So for instance, if you have negative numbers on your accounts receivable or accounts payable report, that's a red flag. Like, you should never have negative numbers on those type of reports. They also can help you get prepared for tax season. So a CPA is someone who actually is an accountant and they have set for the exam.
Okay.
So a CPA can do all of the bookkeeping, all of the higher level accounting, but a lot of CPAs, they are just focusing on taxes. So they may hire a bookkeeper or other accountants to do that monthly and daily tasks. A CFO is someone who is, how can I put this? They manage the whole accounting for your organization. So if you're in that $1 million to $10 million range, you probably should have a CFO. Maybe not a full-time, but probably a part-time. and they're managing the whole accounting system. They're working with your bookkeeper, they're working with your CPA, whoever you may hire. And I always tell people, understand first, like what you need before you go hire someone, because usually CPAs are more expensive and CFOs are more expensive. So if you are really, just a small company, I say, you can do it yourself, and then and possibly just have someone come in monthly or quarterly just to review your financial statements.
Okay. Well, that's good to know because my mom is a CFO and I had no idea what she did
Yeah.
at all. Okay. And then lastly, what are some common mistakes that you see companies make, especially small businesses that you like see every day when people come
Yeah.
to you?
I think number one, not focusing on their finances. A lot of times we feel like long as we are getting the check in and we have some money in our business checking account, we're okay. But there's more to it than just saying, oh, I have some money, I can pay myself a salary. You really want to focus on getting those accounting records updated and accurate. I see a lot of errors in just the accounting software, duplicate entries. Like I mentioned, the accounts receivable and accounts payable, because I mentioned that because I saw that last week with a client, and they had credits from 2015 that their former bookkeeper never cleaned up. And that's just something like you just have to, get someone to help you clean those up. And also going back again to the bank reconciliation.
Yeah.
You have to reconcile your checking and savings account. Very important, because if you are not reconciling, then your accounting records may be over or understated. So very important just to make, basically with the reconciliation, you're just making sure that whatever the bank says, you have in your accounting records, and that's it.
Okay. I know that me and you, as you were talking, I was remembering more things that we had talked about.
Mm-hmm.
The importance, and I think a lot of people don't know this, the importance of the ratios, and banks look at ratios for loans, and a lot of
Mm-hmm.
people don't even know about like profitability ratio,
Mm-hmm.
liquidity ratios.
Mm-hmm.
So can you talk a little bit more about that, like the importance of it, especially if small businesses are about to need loans, like how
Mm-hmm.
important is that for
Mm-hmm.
banks?
Yeah, very important. And the key is reviewing your balance sheet. So a lot of times you hear everyone talk about, oh, revenue. Oh, they have high revenue. So like if you hear news about Netflix, like I think, was it this week or last week, Netflix reported a possible loss. And a lot of people, to me, I'm not that concerned because you have to look at their balance sheet. So the balance sheet is like the stepchild
Okay.
of accounting reports,
Okay.
because the balance sheet actually tells you if you're healthy. So that's where all those ratios come in effect. So the bank will actually focus more on your balance sheet. They're going to look at the current ratio. They're going to say, okay, you know what, you have so much, do you have enough assets to cover your liability? So, God forbid, if you have to close your business, could you sell all of your assets, cash them in to cover your liabilities? They're also going to be looking at just that cash flow,
Yeah.
where that cash flow is coming from. Is it coming from loans? Is it coming from credit cards? They're looking at all of,
I know what
all
you're
of that.
talking about, the debt equity ratios.
Yeah. Yeah, they're looking at that. They're looking at your short-term and long-term liabilities,
Yeah.
and, really trying to understand, okay, what's the terms of that short-term and long-term liability? So the balance sheet is really important, because if you think about it, your accounts receivable is actually money that's owed to you.
Mm-hmm.
Your accounts payable is money that you owe to someone. So you always want to make sure those look reasonable, because if you have a high accounts payable, the bank is going to say, it doesn't look like you pay your bills on time. So
Yeah.
why should I lend you money?
Okay.
Mm-hmm.
Okay, that's so crazy because we're literally learning about this right now.
Yeah.
Okay, so I think, is there anything else that you would want to tell the Ladies of Sisters Alliance before we wrap it up this week?
I just say, with your accounting and bookkeeping, keep it simple, don't go out and spend a lot of money on a accountant, feel free to, reach out to me just for a free consultation. And then if I can't help you, I can refer you to someone. But once again, just keep up with your finances. It's not that difficult. I've been telling people just schedule it on your calendar like it's a doctor's appointment, like you can't miss it. So, not everyone, we didn't all major in accounting, but you can learn it.
Okay, and you said that people can reach out to you for a free consultation. How would they go about finding you?
Yep, you can go to my website, Insight Financial Group, indy.com. Also have a Facebook page. I'm actually doing Facebook Live videos, just providing some tips every Wednesday. So feel free to go out there, and that Facebook page is Insight Financial Group, and that's where you can find me.
Okay. Well, thank you for coming on Sitting with Sisters. I loved having you, obviously. Yeah.
Okay, well, thank you.
Yeah, so we'll see you guys in the next episode.